Hi guys, so Williams-Sonoma is a company that I've been following since 2022 and that I think has some really interesting characteristics that make it a strong business. But before I go into 5 of those that I collected for this video today, I wanted to say that as a disclaimer, I really don't like stock analysis videos that end with a conclusion about you buying or selling a stock. You should always do your own analysis before you decide to buy something. So I hope this video serves just as a starting point for you to do your own analysis. And if you decide to do so, please write on the comment section below what you find and if is there anything that I've missed or that you think it's important about this company, so that we are all more informed about it. So having said that, let's jump into the first point that I really like about this company, and that is their earnings consistency. So I've been through all the annual reports that they have available on their site, and since 2004 this is a company that has always made money. Even in 2009, that it was the lowest year for them, where they made just $30 million. But that was during one of the worst global financial crises that we have experienced. So even in that year, they were able to maintain their profitability. And in the recent years, even with a pandemic, they were always profitable for 20 years. So this is something that is good to see, because you can assume with a reasonable probability that if they were always profitable in the past, that there is a high probability that they will remain to be profitable in the future. About this point, I cannot resist but to use the same clip that a channel that I follow that is very good, the Swedish investor, used to illustrate the same point about the company that he was talking about.
Just keep swimming, just keep swimming, just keep swimming, swimming, swimming.
Some of Williams-Sonoma's competitors that operate in the same space don't show the same earnings consistency. As you can see, they have always some periods where they were not profitable. This is the net income chart for Kirkland's that has 3 years where they lost money, and the same happened for Target. For at least 1 year they also lost money. So now, jumping into the second point that I really like about Williams-Sonoma is that they also have very high and consistent return on invested capital. So this is a measure of the efficiency of a company at allocating the capital that they have under its control. And according to Charlie Munger, like you can see in the quote below, this is extremely important for the returns that you will get from investing in a company. So before we see the return on invested capital of Williams-Sonoma, let's keep in mind this quote from Charlie Munger that says, "Over the long term, it's hard for a stock to earn a much better return than the business which underlies it earns. If the business earns 6% on capital over 40 years and you hold it for that 40 years, you're not going to make much different than a 6% return, even if you originally buy it at a huge discount. Conversely, if a business earns 18% on capital over 20 or 30 years, even if you pay an expensive looking price, you'll end up with one hell of a result." Well, in the last 10 years, Williams-Sonoma was able to produce much more than the 18% that Charlie Munger gives as an example of a great business. It actually produced in most years over 30%. So this is very high and consistent return on invested capital, which gives us a good indication that Williams-Sonoma is able to generate profits without using a lot of capital, which is great to see in a business. And now we arrive to the third point that I like about Williams-Sonoma, is that it has been using its excess cash to buy back their own shares. So if we see this graph that I took from Ticker, the number of shares outstanding from Williams-Sonoma went from 95.2 million in 2015 to 65.3 million in 2024. So what this means is that if you were in the lucky position of possessing 20% of the company in 2015 and you didn't do anything, you didn't buy any single share extra, now you would have 29.2% of the company. So it's very good for the current owners of the company if the shares are not crazily expensive. If the company has extra money and they buy their own shares, you will end up with a bigger and bigger slice of the pie, let's say, a bigger and bigger percentage of the company, which is good. Another point that I really like about this business is that it has a very strong position in regards to their suppliers. They are not like, I remember reading about Foot Locker and the problems that they had when they lost the business that they had from Nike, because it accounted for a huge percentage of their sales. This doesn't happen with Williams-Sonoma because, as you can read on their annual report, the biggest of their suppliers accounts for only 3% of the purchases that they did in fiscal 2023. So this is really a strong position to be in because you have a lot of negotiating power. You don't rely on any one supplier for anything, so you can always change and replace. So you have a lot of power to negotiate and to reduce the prices and to change suppliers if you want. Another related point that I like is that they have a very capital light business model, so they don't need a lot of money to operate. They don't have any long-term debt, for example. So most of their liabilities are the capital leases that they have on the stores that they need to sell their products and on some distribution centers, but they don't need a lot of capital employed to run their business, which is good. The last point that I wanted to touch on today's video is the management of the company. So they have kept the same CEO since 2010, which is good. It shows some stability. And I think that she's doing a good job. Her name is Laura Alber, and you can find some interviews on YouTube and some earnings calls. And I've watched some of those, and I always like the answers that she gives. She seems to understand really what their business is all about, and I'll end this video just with a short clip of an interview she did with Jim Cramer. And I like that Jim Cramer was all nervous about the price changes of Williams-Sonoma on that day because it had dropped by $30 or something. And I like the answer that she gives, that she doesn't care about the price changes of one day, that you cannot care about that, and that you should focus on the what you can control and on the long-term results of the company. So I'll leave you with that clip. Let me know what you think on the comments below, and subscribe if you want to keep in touch and get more of this type of content. Thanks. See you later.
Not good, because you see, Laura, when I left to go to the dentist, the stock was up 30, and when I got out and woke up, it was down 30. And I still think it's the same company the whole time. Would you agree with me that it's the same company?
You can't worry about a day in the stock market. But, we're focused on what we can control, and that's served us well over the long term. And right now, we're proving that we can perform in any environment, and we can continue to increase profits higher than people expected. And this is a quarter that showed us that. We beat earnings, we beat the top line guidance, we took up the year, but it's early in the year, so we probably didn't take it up as much as they wanted. But it's early in the year, and we got to give ourselves some flexibility.
Well, I think that's right. I think you understand. Unfortunately, it is a bit of a game. We don't like to play it on mad money because we've liked your stock the whole way, because we think that you do a great job, and because we think that your stuff has a look, it has a feel, it has a sense of quality that is not having it caught up with things that people are saying, well, wait a second, there's a buyer strike, I'm not paying those prices. They are paying your prices.
Yeah, we have a very different competitive advantage than most, which is that we design our own products. And we have our own sourcing organization, so we're able to bring innovative products that no one else sells, frankly, in the market, and bring them at better prices and better quality than our competition.